Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Friday, January 21st. This will be a technical analysis breakdown. So if you are somebody that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions, then this will definitely be a video for you. Before I get to the watch list, though, I want to first personally invite you to get signed up for this free live online class that I'm offering. So if you're liking what you see as I go through the video and you want to learn more about this tool, how it can be used, how it should be used, and why it's powerful and building consistency, then definitely get signed up for this free online class. Now, one note here, depending on when you see this video, you maybe have already missed the class. So if you're watching this on Friday morning, for example, you've already missed it, or maybe you're watching it and you just have something on your schedule already. In either situation, it will be recorded. So after the live event is completed and then recorded and I get it uploaded, I'd be happy to send you a link to that. So just drop me an email, clay@claytrader.com. Now, of course, if you can make it live, then definitely just get signed up. But if you can't, for the reasons discussed, I'd be happy to send you a recording of it after it's completed. So like I said, just reach out to me via email. A couple of quick clarification points before I get to the stocks themselves. First off, I'll be using the 30-minute time frame. So if you're a beginner, all that means is that each one of these candlesticks here, as they're called, represents 30 minutes worth of time. And next, the market is still open for a few moments. So that final candle you see right there, it will be moving around on the charts that I talk about. But I like to do these videos when the market's still open. Sometimes we can capture some really interesting action live. But as far as the general levels that I talk about, everything will still be relevant as we head into Friday. So first one here, ticker symbol AMC. And what a crazy day, which ultimately turned out to be a pretty bad day as far as the chart is concerned. Now, it started off great. I mean, I drew that green line in place previously. You can see the price came down there, bounced off it, and then made a massive, very impressive move. But not only did it give back all those gains, so literally all those gains, because the lowest it went was right there, and now it's down below that area, but it has continued to sink downwards. So by giving up all the gains, it's also broken down below that trend line right there, which isn't the end of the world. But I mean, the way it started so strong, very disappointing to see that the price has now gone all the way back down there and broken through there, which now once again brings up $17.80, that green line down there, which is certainly going to be the next key level of support to watch moving forward. So keep a close eye on that. If the price does try to recover back upwards, and as I've talked about previously and what played out today, it's all about that purple line there, that very stubborn 50 period moving average. Sure, the price broke above it on several occasions, but the problem has become actually staying up above it. So until the price can not only break above that area, but stay above it, then I'd be very skeptical of any sort of breakouts of that area. But as of right now, breakouts aren't really the top priority. The top priority, given that the price is continuing to fall right now, is the price going to be able to hold up above 1780? We'll see what happens. Next one, SOFI, and this will mean a bit more to those of you that watched yesterday's video, but I talked about that red line right there and how that was a huge key level of resistance that a lot of people were watching. If it was broken, you could get some sort of self-fulfilling prophecy. I mean, check it out. Opening 30 minutes, price came up there, broke through it, and then a fantastic tradable move. So for those of you that caught that breakout, a big congratulations. But the first update that now needs to be made is just based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So going into the day, that 1440-ish area was the key level of resistance, but now that's going to be the main area of support. Because, I mean, think about it. Even if the price were to pull back even more, but then just go sideways right there, what would that still be giving you from a big picture point of view? Well, that'd be giving you a set of lows there, lows there, lows there. You envision each of those as stair steps. And from the bigger picture, you'd still have stair steps progressing in the upwards direction. Now, there is a bit of perspective. I understand if you're a day trader and you bought right there and your plan was to buy and sell within 7 minutes. Well, then, yeah, from that perspective, the chart looks really terrible to you. But from the overarching standpoint, even with the big pullback, the trend does still remain in the bull's favor. Next one, APM, and I like this one a whole lot because going back to what we just looked at with SOFI, there's, we'll call the self-fulfilling prophecy area. I mean, there's a bunch of people that are going to be watching up there right around $1.71. And while that does not guarantee anything, what it does do is it makes it a more than plausible thought process to have that if the price can return back up to that area and then get the break up through it, that break in and of itself could create quite a bit of additional buying pressure. Again, no guarantees, but that's certainly a plausible thought process to have. So pointer being is if this price can return back up there, $1.72 is going to be a very highly monitored level. And then from the pullback standpoint, an area that I'm sure a lot of people will be caring about from that, if they like to play pullbacks, is going to be that pink line right there, which on my chart denotes the very famous 200 period moving average, currently valid at $1.49. And as I speak right now, the price is actually, I don't know, maybe it's going to get down there and test it. But overall, those are definitely going to be the two main areas. So if you like to play this price range, if you like well-defined areas, I mean, it really doesn't get much better than this. So again, the well-defined area of resistance at $1.72, well-defined area of support down there at $1.49. So let's see what happens. Next one, TSLA Tesla, and a crazy move. Like a lot of stocks today, made the big move up and then completely rolled back over. But wow, do we have a couple of key levels that are now going to be very, very, let me change that, very watched. And like I said, when I point this out, I'm sure you're like, well, yeah, no kidding. But right there at 995, I mean, check this out. 995 bounce, 995 bounce, 995 bounce. So everybody's, brothers, uncles, mailman, sister is going to be watching this level, and rightfully so, and wondering what's going to happen here. You know that there's going to be shorts there watching and thinking, okay, if 995 fails, then there's a very real chance this thing's headed down to, at minimum, 980. But there's also longs that are saying, and again, rightfully so, I can see their logic. Well, it's bounced once, it's bounced twice. Let's see if we can get a third bounce. Again, that is not guaranteed to happen, but you couldn't accuse those people of having some sort of random trade, plan. That also makes a whole lot of sense. So pointer being, this is why risk management matters, because somebody's going to be right, somebody's going to be wrong, but that doesn't separate from the fact that 995 is going to be a very, very watched level headed into Friday. Next one, DATS, and big pullback this afternoon as the market is experiencing. So let's just start off with first some pullback areas if you like to play these sorts of things. And that first key pullback area going to be right down there around $3.20. So if that's kind of your thing, you want to see pullbacks, then a very interesting level certainly going to be right there at 320. If you're more of a breakout player, then the level of resistance that stands out to me going to be right up here, give or take around, $3.90. So keep an eye on that. But as of now, the big dynamic here is a very, very big pullback. And, is this the start of something much bigger, or is it just going to turn out to be perfectly healthy? And once more, from the big picture point of view, assuming that's what you care about, even if the price came down there and then leveled out, what would you still have? Well, you'd still have lows there, lows there, lows there, and you get the idea here, and you'd still have stair-steps making progress in the upwards direction. So once again, if you're a day trader and you bought right there, then yeah, the chart looks terrible for you. But if you do have a bigger picture point of view, then the overall trend is still in the bull's favor. Next one here, BBIG, very popular over the past few days, and the pullback continues. Not a whole lot to report, but like I said, it does remain popular, so want to keep things updated. And the first dynamic here, nothing new, just want to continue to extend this line out, is in my opinion, at least in what's played out very accurately so far. That's going to be the main area of resistance, although there is a new midterm area of resistance, and that's right here at that purple line. So like AMC, that 50-period moving average, you can see several times today the price tried to bounce up above that purple line, couldn't quite do it. So I would still contest that trend line right there is going to be the main level of resistance, but you also don't want to just completely forget about that 50-period moving average. So keep an eye on that. As far as levels of support are concerned, got a very interesting level here coming up right there at the $3.80 mark. And then after 380, next key level of support after that would be down there around 330. So as of now, still a pullback, but from the grand scheme of things, the trend is still up, still plenty of opportunity to build a higher base. So let's see how this one closes out the week on Friday. Next one here, PTON, and this is a very basic premise, and if this is not your style, I totally get it, but this is just a play on, okay, is this just some sort of overblown panic? Is this justified? And just from a risk-reward standpoint, you have some very well-defined levels. So right down here at 23, it's really just a question of, all right, if the price gets down to 23, could it double bottom? You already have one bottom, so could you get the classic double bottom pattern where it comes down there, finds support, and then bounces back upwards? And in my mind, that is a more than rational, valid thought process to have. Because if you're wrong, and again, these sorts of situations only work out, they only make sense if you can honor stop losses, if you can control risk. Because if I'm wrong here, and if this doesn't double bottom and it keeps on going, well, that's why stop loss exists. So my point here is that the amount risk compared to if you're wrong versus the amount you could gain if you are right is a very favorable risk versus reward situation. But some people, they just don't like to play these, and that's fine. My point here is that this was just such a crazy move today, and that you have a potential double bottom point there. So, like I said, assuming you can, honor and be disciplined, then you could have a very favorable risk reward situation on Friday. So like I said, $23, certainly a fascinating level. Next one here, PETZ, and I did this one several times, kind of lost track of it, but one of the last times I did it, I put this green line into play, and at that point was considered a level of resistance, but when the price broke down below it on the 18th, at that point, going back to that rule, when levels of support are broken and closed below, they tend to act as resistance, and I mean, you just can't make this stuff up. Talk about the power of charts. Check it out. Today started off very well, but I mean, you just can't make that stuff up. Look at that. Bounced right off that level and back down it's gone. So point here being is that if there is any sort of attempted movements back to the upside, 55 cents certainly going to be that main area of resistance that the price will have to be able to push up through. As far as levels of support are concerned, nothing fancy here, nothing complicated at all. It's just a question of where did the bleeding stop? And that was down there at 44 cents. So 44 will be very key because as you can see here, if the price drops below 44, then that's put in the lowest it's been even after, this massive move down from a couple of weeks ago. So that'll be that main level of support. But again, the idea here that I do like is you have a pretty well-defined level now up at 55. So if the price is able to recover back upwards, that could certainly create a nice little potential breakout situation. And this one is basically a case of deja vu with Tesla. Meaning like Tesla started off with a nice bounce and then has completely rolled back over, but it's rolled back over now next to a level that a whole bunch of people are going to be watching. So I don't want to spend a bunch of time here because it'll just be me repeating myself, but that level here is $14.50. And like I said, this is why risk management matters, because you're going to have shorts watching and saying, I think if the price breaks below there, that could get very favorable from a short standpoint. But you're also going to have longs, again, rightfully so, given the track record that are saying, well, it's bounced there. It bounced there. I think it'll bounce once again. So they're going to be thinking that too. Again, you got to manage risk versus reward. And, from a resistance standpoint, once more, look at that. The 50 period moving average has reared its head in terms of acting as resistance again. So that'll be a main level that you're going to want to watch. But the point here is such a well-defined level that there's going to be so many people. So from a self-fulfilling prophecy dynamic of things, you got to like this one and you got to like that $14.50 mark. And the next one here, ticker symbol QQQ. So basically the NASDAQ, just a quick way to, analyze the NASDAQ. And I have changed time frames. Now I'm on the traditional daily time frame, meaning this is what you would normally see for you beginners out there. Each candlestick represents an entire day. And I had to do this because from a technical point of view, this is a very, quite frankly, and I don't mean over dramatic, but a historic day. Meaning the price is broken down below that pink line, the 200-day moving average. And when you squeeze this down, it has been a long time since the price has been down below that 200-period moving average. Last time was back during, the big COVID sell-off. And now, like I said, to zoom back in, that's just where the massive question arises. Is this officially the start of something much worse? Is there going to be, just a continued bleed? Or is this just going to be a faulty breakdown where all of a sudden the bulls say, hey, just kidding, and then back up it goes? I don't know. I'm not saying that I know. I'm not saying that the chart tells us, but what the chart is telling us is that we are now at a very, very self-fulfilling prophecy type of area. Because even if you're a basic chartist, even fundamental analysis, people at least, keep an eye on, let's keep an eye on the 200-day simple moving average. In fact, I bet you'll see articles that are talking about how the Qs have now closed below this 200-day moving average. So there's going to be a lot of people talking about it. And the big question moving forward is, like I said, is this the start of a much more bearish move? We'll see what happens. But at this point, it is certainly plausible to get a whole lot more bearish on the situation because of this technical event. It's just a matter now of seeing how things play out, not necessarily just tomorrow on Friday, but over the next couple of weeks. So that wraps up the top 10 stocks here. If you like what you saw and you're starting to realize, okay, yeah, there is a lot of power, but I want to learn more about it. If I want to learn how this works, how it should be used, how it should not be used, and just why it's a great tool to build consistency, then like I said beforehand, get signed up for the class. If you can't make it live, just drop me an email, clay@claytrader.com. Like I said, it'll be this evening, Thursday, January 20th. At 7 p.m. Eastern time. So get signed up if you can make it live, but if it's too last minute or you already missed it, send me an email and I'll gladly send you a recording of the live event. And then as far as these top 10 videos are concerned, if you like these watch list videos and would like for me to continue to make them, please help me out with some basic communication. Hit the like button, leave a basic comment. Say hi, give me an emoji. Tell me something that you traded today, that you're watching tomorrow. But those two things, like button, leaving a simple comment, communicate to me that you enjoy these top 10 videos. And as long as I know people are enjoying, I will continue to make them. So again, if you can make the class, definitely get signed up for it. If you can't make the free class, then just drop me an email and I'll gladly send you a link to it. But everybody take care. Have a good one.